Yes, we're definitely here in a strong seller's market in our area. Now this is total. How many listings actually are there on market right now to pick from? Don't hold your breath, buyers, that you're gonna have a bunch more opportunity or negotiating power coming into Q4. The amount of active and sold listings that I actually see and the median price per square foot that actually means something on this graph. And it doesn't mean that properties can't sell, it means that there aren't properties to be sold. How many properties in your price range made it to the closing table? Well, here are your answers. Now, this graph is the most important slide of the entire video because we see the normal trends historically every single year and how our year actually compares to those. The Milwaukee housing market's average sale price is lingering around $390,000 going into fall of 2023. And that is caused primarily by our staggeringly low inventory still in the Milwaukee market. My name's Jacob Sheets, your Wisconsin realtor, and if you're new to this channel, we like to cover everything Wisconsin real estate, and whenever you're ready, you can click on the link both in the description and the pinned comment below to get booked directly onto my calendar or one of my affiliated agents to have a buyer or listing consultation and start planning your next real estate transaction. And the only other thing I ask of you is to go ahead and subscribe and ring your notification doorbell below so you don't miss any of our future videos. So with that being said, let's go ahead and dive into our September market update in the Milwaukee metro area. Like I mentioned prior, our average sale price in the area is $390,000 currently. Going back and looking at August statistics to project for this next upcoming month, the active listings were down 12%, or I always like to look at the actual numbers. Here we can actually see a decrease in about 400 or so active listings, and right here about 300 less sold listings. So what does that mean? There's about 400 less coming into the market, and there is about 300 less that have left the market. So that means that overall there's a little bit less available still than there was last year, and we're still going through houses very, very quickly. It's at that time again to pause and say there's only two things that really matter in this market update for you to break everything down is the two levers, right? Supply and demand. Is the supply going up or down? Is the demand going up or down? And those two things are what you need to take into consideration when you are buying or selling a house, and the timing of how to do it and when to do it and the strategy and everything behind it. And when you decide you need the additional help of sifting through all that extra supply and demand info, you can of course reach out to us directly on our calendar below to schedule an appointment. Median price per square foot. Now this is caused by our decreased supply and our still pretty strong and or increased demand, going up from $180 per square foot to about $197 per square foot. Our months of supply is standing around the 1.8 months versus last year's 1.7. Basically no change there. And as a reminder, months of supply, what does that even mean for you? That means if there was 100 houses that sold on the market last month, and there's only 100 houses available literally right now on the entire MLS for the subject area you're looking at, that means you don't have 1 month of inventory because everything would be gobbled up in the matter of 1 month and there wouldn't be anything left for sale. Economists would say 6 months of inventory is a balanced market with no advantage to buyers or sellers. And now with how aggressive things have been for literally about 3 or 4 years straight, people are saying that cushion between 4 and 6 months of inventory is a balanced market. So yes, we are definitely here in a strong seller's market in our area. Median days on market went from 16 last year to 18 this year. Again, not a whole big ticket change. You look at these percentages, you think, 7.9, 12.5. That's a big chunk of change. You look at this, it's negligible. Like it's really not that much of a change. These are the points right here, the amount of active and sold listings that I actually see, and the median price per square foot that actually means something on this graph. So if you're wanting a big picture of absolutely everything going on all in one place, you can pause the video right now and just take a look at everything that we have here side by side from our August stat review. Now we're going to go through in this video and we're going to take a look at each one of these that I think is the most important to look at and break it down on what I look at going and analyzing the market. Now this graph is the most important slide of the entire video because we see the normal trends going all the way back to 2015 for new listings coming on market, or aka how much new supply and increase in supply is coming historically every single year, and how our year actually compares to those. As we can see, these new listings that are coming up, usually there's around, let's say 2,700 or 2,700-ish, in this kind of Q2 that comes in market every single year. And what's super interesting is that this is about new inventory, right? So supply coming up, and we're saying that how does inventory keep getting lower and lower and lower if new stuff is still kind of coming in at about the same pace? What that means is that this stuff is getting gobbled up even faster than it was the year before. Now, if we see the new listings, I just like, even just this month going and looking at it compared to years prior, this is like pretty normal. We're looking at even these years in the pandemic of 2020 into 2022, maybe 2023-ish. We see a small dip getting closer to 2,500. This one we had a huge amount, and in 2021, this season post the beginning of the pandemic, kind of catching up for our dip down from mid 2,500, 2,700, kind of caught back up here, and like, oof, we barely got over 2,500 from this last year. And oh my gosh, look at this. We dipped all the way down to about 2,000 new listings to market. So why is this happening, and what does it mean to you as a buyer and seller? The why is because interest rates have been creeping up for the first time and for like forever. We're floating around a 7% interest rate. So people that don't have to sell, they don't want to sell. That means for you sellers that when you go on market, you're going against a lot less other competition. Of course, we're going to have later on this broken down by price point. But for you buyers, what that means is, I am so sorry, but you will still be waiting a little bit longer. You will still not have the opportunity to buy on the cheap now, going into your fall and winter season, and you will not be having some sort of crash that you can take advantage of, most likely, in this next market cycle going into Q4. Things always slow down. We have holidays, we have terrible weather, so sometimes buyers have a little bit more leverage, but I anticipate this Q4 to be sparse, to be very, very low inventory, probably worse than we've almost ever seen. And yes, you can still maybe find a deal if something's been sitting on the market or is not in perfect condition. But beyond that, don't hold your breath, buyers, that you're going to have a bunch more opportunity or negotiating power coming into Q4. Now let's quick look at pending sales. This is, again, how many properties got under contract and they are waiting in escrow to get to closing. We've actually had an increase in pending sales from the years prior, which is usually in the 400s range. And what does that mean for us? It means that, like I said earlier, we are coming into a potentially very intense drought still into Q4 because the pending sales, people are still buying and still ramping up that amount of pending sales properties under contract because our pent-up demand, people are still just taking everything that comes onto the market and eating it up. And like I said earlier, we can see every single year, we see a decline in these pending sales. People get distracted looking at holidays, all of their stuff, and again, bad weather. We aren't seeing that right here. So that means that our demand is still crazy high and crazy strong. Even though our new houses coming available is decreasing, our demand is staying crazy high. Up next, we have closed sales. So we can see a large decrease in closed sales year over year here. And we can see we're on the same trend up and down every single year, but we're really, really low. And it doesn't mean that properties can't sell. It means that there aren't properties to be sold. So again, like we said earlier, we saw on the last slide, pendings are going up. So that means the amount of houses that are going off the market going into Q4 is really high. But the actual amount of closings that have recently happened are down lower because there's just not enough homes to be sold. So we can anticipate still this continued trend going downward here, but at the same time, this is going to really set us up for a very interesting Q1 of next year. Now we have days on market. How long does it take to get your property under contract and into escrow, getting ready to close? And the average days on market that we are looking at here is, this 18, 21 days. As long as the house is priced right, it's in good livable condition and in a good location, you will have very, very little to worry about, you sellers, going into listing your house in the entire Q4 going towards 2024. Now, as a buyer, like we said, days on market here is simply saying that you got to act really fast. If you see something that you like, don't wait. You can't have time to think about it. I'm so sorry to tell you that bad news, but you don't have time to think about it. If you like the house, you have to move, and you have to move very quickly. You have to have your ducks in a row. You have your pre-approval ready. You have to have potentially pre-underwritten. I have lenders that can make us, instead of closing in 30 days, close in 14 days, where we can offer cash guarantees to make your financed offer look like a cash offer and be able to back it up by saying they will buy the property if you fall through on your financing. You got to get proactive, and you got to get creative in how you're going to make your offer even stronger, even in this really, really interesting, Q4 where most people think things die down, when in reality you might still have some competition going into the end of the year. So if you need to move, you need to come to this area here in this winter time, just be prepared for that. Median sales price. This slide is crazy. So we have a usual slowly, gradually increasing year after year, and the pandemic happens and whoa, we just get huge inflation pricing. Whether you're going to say by that's forced appreciation or by, artificial inflated pricing due to, COVID money being printed all over the place. Go ahead and you can comment below on your thoughts on that. The trends always say that it's going to be going down during these, Q4 months, which is anticipated, which is normal. It's just a matter of how much is it going to go down. We kind of see level, drop, level, drop, level, drop. Here we see the level. Now we'll probably see some sort of drop, but the question is, how big is it going to be before we launch into another, my opinion, will be increased pricing into the year to come. For anyone who wants to cross-reference, that was the median sale price. This is our average sale price. So you can extrapolate just about the same thing, just from a different standpoint and different way that the numbers are crunched with an average instead of a median sale price. So the really fun one, how much our property is actually selling for versus what they were listed for, list to sale price ratio. So as a reminder, this 100%, if we get a house that sells right there, we list our house for $100,000, it sells for $100,000. If it's 102%, congratulations, you're now sold at $2,000 over the asking price. Or a $200,000 home, it would have sold for $204,000. So we go over here, we see what August of this year in 2023 did. It was smack dab on 102%. Now, what did August of prior years do? Right here, we were at 101-ish%, and August of this year is right around 102. In short, this looks very, very, very similar from prior years, and we might see a carbon copy of these past 2 years. My anticipation is that our list to sale price ratio will likely not get as far down this year with the 98-97% from last year, because like I said earlier, the demand is just still so crazy stacked up and strong that I really don't think that these buyers are going to get too much of a break, and will still be competing throughout the holiday season for something that is in, again, that good price and location and condition. And now the mother of all supply slides. This is the actual amount of homes available. On one of our earlier slides, we saw how many new listings came to market. Now this is total. How many listings actually are there on market right now to pick from? So as we dive in, we can see back in 2015, January, 6,000 available properties to look at. Now over in 2023, we had 2,000 properties available to look at. And if you look at the peak of it, 8,000 versus 2,000, that's 1/4 of the total inventory at one point in time. Not much room to get much lower. So if we do continue our same trend of going down, it'll be a dangerous proposition for almost any buyers that are looking to buy a house at all. Months of supply, we already talked about this in pretty good depth, but we're in that range of 1 to 2 months of inventory on market, and we've been that way for years, since 2020. Nothing new here. Now let's look at these broken down by price point. This is how it applies specifically to you and your niche. So the average sale price went up from last year from $350 to $390. For just single families was $370 to $412,000 is the average sales price. And condos from $284 to $302. So an increase in every single area. How many properties in your price range made it to the closing table? Well, here are your answers. Pretty stable year over year for the 0 to 100,000 range. Much less from the 100 to 200, 2 to 3, 3 to 5 price range. This year, what is this saying? That there's so little homes available. Every single one of my buyers feels this constraint and this crush. Again, not because the homes couldn't sell, but because there were no homes to sell. So what do we tell from this data is that a lot of the homes that are not coming back into the market and into the flow of things are in this $100,000 to $500,000 price range. At this lower inventory of 0 to 100 and the upper inventory from 500 to 3 million plus, it's pretty consistent from year over year. Not a lot has changed on the amount of inventory. Here, with these types of buyers and sellers are the ones that are really being impacted, the $100,000 to $500,000 range. Quick snapshot of the pending sales, pretty consistent on all areas. As a reminder, this is the amount of properties that are in escrow during that month, during this time of August. And if you're wanting to dive deeper on this one, feel free to pause the video and scroll through all the analytics. Days on market, how long are properties taking to sell? In August, remember, this is just a month-by-month play-by-play. And we see that this last month here, pretty consistent, taking a little longer than last year to sell our $500,000 to $700,000 homes. And our 700 up to ultra to luxury and ultra luxury homes, it's taking a little bit longer to sell those properties. Here's by price point on the list to sale price ratios. You can see into the lower price range of 100,000 and less. It's very common for these to be discounted properties, getting below asking. And then when we get into this 100 to 500,000 price range again, we can see, it's about the same from last year, large increase. And especially, let's say the 200 to 500 or 200 to even $700,000 price range. We're seeing way more offers that are over asking price in this $200 to $700,000 price range. Now, when we get even higher than that into the luxury, we can see in this 700 to $1 million, in this coming into quarter four, a little bit more bargaining availability and going in slightly below asking price. I believe this is 99.5%. But again, nothing crazy. We're not going discount shopping and getting 20% off properties on market here. If you are in this $100,000 to $500,000 price range, I'd say really even more the $200,000 to $500,000 price range, this is where you can see all the constraint, right? The inventory of homes for sale, everything that's available, broken down by price point. 480, so we're down, let's say 60-ish here, and we're down significantly here. We're down very significantly, $300,000 to $500,000 price range. In this $200,000 swing of things, you have a very, very large decrease in homes available for you to even take a look at here in quarter three, going into quarter four of 2023. And as you could guess it, kind of going into this luxury space, we have an increase in inventory, which we saw is kind of leveled out demand and causing less competition for this type of price range in buyers. By again, no means do the buyers have all the leverage in that scenario because of that, but it just kind of is showing you what the stats are saying going into the fourth quarter. Finally, we have our months of supply, or how long our houses are expected to last here. We have, so much in the 3 million. As a reminder, this is based off of an equation, right? So how many houses that sold last month versus how many homes are available right now. In Wisconsin, we don't have a whole ton of homes that are above the 3 million price range. So I tell people, don't take too much stock in how many months are available of inventory in this large luxury price range. Now, that being said, there's just not a lot of available inventory. We had an increase from this last year into 2.7 months in the $100,000 to $200,000 price range, but everything else is just a seller's market with very, very low inventory. So yes, sellers, you do, for the most part, if you have the right price, condition, and location, you have the leverage. And unfortunately, buyers, you will be fighting if the sellers have the right price, condition, and location. So with all this information, what do you do with it? Buyers, talking to you directly, if you're looking at buying in quarter four of this next year, you have to be prepared. You have to be ready to act quickly, even though it's going to be a wintertime market, and understand that you just won't have a ton of options to look at. And if you absolutely need a place to live in this timeline, you will have to make some sacrifices, potentially to even get in not just your dream home, but really any home. Get set up on your MLS strips and see all the notifications so that if you don't necessarily have a huge urgency needing to move right away, you can kind of passively go along and see, oh, this is a really nice home. I'm going to call Jacob up. We're going to take a look at it. And then just, when the right thing comes up, move on it. Don't completely unplug from the housing market altogether and then re-plug back in January, February, because then everyone else will be plugging in at the same time. Keep your radar up and ready in case something you like actually comes on the market. You can pounce on it with potentially less competition. But if you don't need to move, just chill a little bit, knowing that you will probably have low options this coming fourth quarter. Sellers, this is the time where I usually tell my clients that, hey, you need to make a decision. Do you want to list right now, or do you want to wait until the beginning of next year, kind of in this late January into early February time, so that you can beat out the other competition? Right now, this is looking like I definitely would still recommend, if you're planning on selling before the end of this year, you want to do it before the holidays. But if you're going to list, this week here in September, or kind of mid-October, and just to get a few more things done, it's not like you're going to miss out on the whole train here and you're going to wish you would have listed a month earlier because there's no buyers available. That's not so much the case, but I would recommend, some people might, you just got to go right now or wait till the beginning of next year. Not so much the case this year. You can go ahead, take your time if you need to do a few projects. Don't diddle daddle or whatever just because you don't want to and you're lazy or you're procrastinating. Then just list now if your home's ready. But if it's not, you can take a little bit more time for the next couple weeks or month or so before the holiday season happens, and get it ready to list. So, do you agree with my opinions, buyers and sellers out there of the internet? Go ahead and comment below. Let me know what your thoughts are on this market going into the fourth quarter, if I think I'm spot on, or you and your crystal ball is a whole lot clearer than mine. With that being said, if you do want to look into one of my crystal balls with me or my affiliated agents, go ahead and reach out below on the link in the description and in the pinned comment below to have a buyer or seller consultation with one of us. And of course, before you leave, please do subscribe and hit our notification doorbell to not miss any of our future videos. Thank you so much for watching, and I look forward to seeing you next time.